Hey YouTube, what's happening? Chris here. Wanted to bring you guys another little tutorial. Last time you guys gave me those 100 thumbs up and I told you I'd get you guys another video. So if you guys would do that again, we'll keep them coming and you guys can keep learning if you like these. So guys, what we're going to bring to you today is the triple bottom. And we're going to talk about it. We're going to read and talk about the triple bottom out of my book here. That's called Getting Started in Chart Patterns, and that's by Thomas Bulkowski. And guys, this book is a great book. It's a wonderful, wonderful read, and it breaks everything down. Wonderful. So guys, what it says here about triple bottoms, and we're going to be looking at this on the chart here, and you can see we're having bear flag after bear flag here, guys. Those are bear flags. If you don't know about those, we could probably do a video on those at some point. If you guys would like that, put that down low, or what you guys would like to see. And then what we're going to look at here, we're going to have this first push down. Then we're going to have the reaction where we come up, and this is our first bottom. Then we come back down, second bottom, come back up, third bottom, and then we come up and we break the neckline that comes across here. That's the resistance. So here's your support down here, your three touches, and then here's your resistance, and we had the breakout to the upside there. Now sometimes you'll break out and then you'll come back and touch, and then you'll move forward, or sometimes you just break out, or sometimes it's a false breakout. So we have to be aware of that, and we have to look at volume. But what I'm going to do here is read about the triple bottom so you guys can understand this a little bit more. And if you want to, guys, grab a pen and paper. It always seems to help me to write stuff down. And what I like to do is go through these books. First I read them, then I read them and highlight them, and then I read them and I break it down, writing notes with them, and that really helps. So guys, it says triple bottoms. If you know what a double bottom looks like, you can imagine what a triple bottom looks like. Triple bottoms tie with head and shoulders in terms of overall performance. The average rise measures 37%, ranking the triple bottom 10th out of 23 contenders for bottoms. The break-even failure rate is 4%, meaning that just 4% of the triple bottom failed to rise at least 5%, placing triple bottoms in fourth place. Finally, once price reaches the ultimate high, it tumbles 33%, also placing the pattern fourth. So it's saying, guys, you're going to have a breakout of 37% on average, and then on average after that, you're going to have a pullback of 33%. So you're going to roughly keep 4% of the move, and that's the importance of learning how to sell at tops, guys, and that's why we want to study those things. And then it says identification. Identification of triple bottoms shares many of the guidelines of double bottoms. Look for three valleys, all bottoming at about the same price, widely spaced so that they are not part of the same valley, and with the distant peak between them. I set no minimum price rise between the valleys, as I did with double bottoms, because these patterns are rare enough without such qualities. And then here are the guidelines. It says prices should trend downward to the first valley, but should not drop below it. In other words, you don't want to see a sinkhole before the first valley. Number 2, the three bottoms should appear near the same price, but allow for slight variations. Next one, guys, several weeks usually separate each valley. And you'll see, guys, this pattern here, the triple bottom, will take place between usually 3 and 6 months is about how long it works out. The next one, guys, volume trends downward 67% of the time from the first bottom to the last, but may be high beneath the individual valleys. Price must close above the confirmation price, above the highest peak in the pattern before the pattern becomes a true triple bottom. Then the last one there, if a double bottom forms a third bottom before the double bottom confirms, treat it as a triple bottom. So guys, that's what I wanted to bring to you, and just really pay attention to this and really dig into the details and focus on how the volume works with these patterns as well. And you know, it can be so beneficial to be able to spot these different things, guys, so that you can anticipate and really look at these patterns in these charts. And I think this is a big portion of technical analysis, is this pattern recognition. You know, it's great to be up real close and looking at all the candles and see what's happening on the day. You guys know I love to do that, but it's also great to really step back and take a look at these patterns. I mean, you can see on this chart here, guys, look at the lower highs that were forming right there, and look at the lower lows right here, and then you have that reversal that's starting. But if you can identify something like this, where we had this big push down on volume, and then we move sideways, volume dries up, and then we have that big massive amount of volume that comes back in, that's a textbook bear flag, guys. And if you draw your trend line here, and we would have seen that close off this candle here, that would tell you that the price was going to go down. So these are the different things that I'm looking at, guys. I didn't want to ramble too much here. There's a lot in each chapter about all these. And I guess, here's a couple more, guys. I'll just give them real quick. It says, on this chart pattern, throwbacks happen 64% of the time. And when they do occur, performance suffers. 41% rise post-breakout without throwbacks versus 34% with throwbacks. And then it says, if the last valley bottom is above the price of the second valley bottom, then expect better performance. 43% average rise versus 32%. And that's why, guys, I was telling you this book's so valuable, because this guy has went back through tons of charts and patterns, and he's back tested them, said, okay, this one will break to the upside 64% of the time, or this one will break to the downside 23% of the time, or whatnot. So he's actually testing these, and like how we were looking at this triple bottom, he said this is the 10th best performing bottom out of 23. So there's better ones, and there's also ones that don't perform as well. So really study into these bottoms, guys, especially with Bitcoin where it's at right now. It's really important to understand bottoms, because we're looking to see when that bottom's going to be put in. Is that bottom already been put in, or are we going to have some type of a double bottom right now? So we're paying attention, guys. We're learning. We're reading. Like I said, I'm going to continue to try to do these videos as much as I can for you. If you guys could give me the 100 likes, we'll keep them coming, because, the people who are watching these videos are the people who want to learn. It's more than just, a quick interest in Litecoin or Bitcoin or anything like that. You are here because you're really trying to improve your life and learn trading. And once you guys learn trading, what's so amazing about it is that you can do it in any market, anywhere in the world. I mean, really, guys, if you learn how to trade cryptocurrency and learn these Japanese candles techniques and how to read a chart, you can do it in rice, pork bellies. You can do it in, silver, in anything. And that's what's so great about it, in stocks. So that's the importance of learning how to do this stuff, guys, and learn how to do it on your own, studying on your own, so you don't have to rely on just a YouTube guy. It's great to get analysis from everybody, but you want to be able to do your own analysis. So that's what I wanted to bring to you guys. Excuse me. God bless each and every one of you, and take care, guys. Have a great night.